right. So for those of you in week one, do you have any questions regarding any of the feedback, test, homework, video, anything?
Nothing in particular for me. I'm just looking forward to when you see something that I'm struggling with, asking you about it. So,
What is it that you're struggling?
just wanting to see the more examples because I know in my homework I talked about some of the where it looks like it's forming the M and then it ends up kind of coming back and forming the W. So just being able to recognize that better.
Gotcha. You're talking about like maybe going from a type 2 to a type 3.
Yes.
So the question is how would you know whether you're expecting, let's say, a type 2 or a type 3? Would that be accurate then?
More so, I wish maybe what I'll do is might send you a screenshot of I think it was this week's video, or maybe it was in the YouTube video you posted. Anyhow, it was coming out, and I think what I mostly struggle with is type 2, where it's kind of consolidating still within that Asian range, and so let's say it forms and then it comes down and okay, it's going to break out of there, but then it ends up hitting it and then reversing again. So I think it's the type 2, but it's not breaking out of that Asian session. That's really confusing me.
Or so, I mean, a type 2 pattern, right? The biggest thing that you're going to have with a type 2 is that it has to get through the middle of the range. And if it doesn't get through the middle of the range, then obviously it's going to turn into a type 3 more than likely. So the question becomes, how can we try to anticipate whether or not a type 2 will form or whether it be actually a type 3 pattern instead, right? So a lot of that comes down to knowing essentially the directional bias that you have. Because if you have a directional bias cell and a type 2 is forming, then that's essentially what you would be expecting. But if you have a different bias like a buy, and your price action is the only option that you would, the perfect option for you at the time might be a type 3. So start looking at, let's say, this, for example, and let me turn on this. We go back here to this day. This is Friday. Friday. So if you get Friday and look where price action is before the lunch session started. Right. So price action is down here. So what's the likelihood that price can come all the way back up and do this versus doing here and just turning around? So the biggest thing that I see is that you have the 50 here. That's probably going to block or to block a move to go high. Another thing that you have is, if you just zoom out, so far for this week, you've been creating. If you see higher highs, it's time to come and create a higher low here, or at least a sell. So because of where price action is, you get where you're like, all right, well, what do you really think a type 2 is possible here? I don't really think so. I think the more likely thing to happen would be a type 3. And that's essentially what happened here. Now, if you tell me that at the same time that this, let's say that this pattern here, let's say at the same time, if this was this price action was up here, right, then I would tell you something completely different, right? Then I would tell you, okay, obviously, if it's already up here, it's very likely to come up here,
Okay.
or even to go up higher to do a type 1. You know what I mean?
Yeah, the knowing how it's going to respond to the EMAs. So then kind of a quick follow-up question with that. What's the likely, I'm also with the EMAs, it's going to come down and probably hit that 100 EMA and bounce back up, right?
Well, I don't use the 100 EMA, so I don't know.
Sorry, what's your right one again? I'm blanking.
It's 50, 200, 800.
Oh, 200. Okay.
Yeah.
So is it going to hit the 200 and come back up?
On that sample?
Yes.
Here, let me get to.
Would you take profit at the 200?
Oh no, so because the 200 here is so close, you won't use it as take profit. You would use maybe the 800 here or yesterday's as take profit.
Okay.
So you would be looking at a trade setup that's kind of like this or like that. Which one to go to? I think it's to both. So it was past that.
Okay.
So the one they'll always tell you if you ask is like you know, people say, well, what's what do you think is gonna happen, and what do you think is gonna happen tomorrow? I don't know. Ask me like 2:30 or something.
Mm-hmm.
You know, it really all depends on where price action is towards the Asian session.
Okay. So I really don't. I don't want to dominate the call at all. But so what I see on this is it's going to come down. This is where I struggle. It's going to come down and possibly hit the 200 EMA and do a type 1 W formation and then continue back up. So how do you know like when to rely more on the EMAs, or you know what I mean?
Yeah. So if you're thinking about it coming back up to a W here, then you have to have a very good, I would say, like almost fiction is to why are you thinking that? You know, what gives you, I guess, the thing that it would likely hit, let's say a W here at the 200, and then be more of a buyer. What would be your thinking behind that?
Well, you've started a uptrend on the beginning of the week. So it does make sense that you would have kind of a midweek reversal, but is it going to close out on Friday again around the 200 EMA and then continue in an uptrend?
Right.
This is where I think I get too over analytical.
Yeah, well, I think it's a lot of it, to be honest with you, I think it's just the fact that I haven't had a lot of charts or time to actually see it over and over again.
Okay, yeah, that makes sense.
So how long have you been reading so far?
I've been studying trading for 3 years, but really it's kind of studying this method for probably 6 to 8 months. But like I said, I will overanalyze anything to death. So
Sure. What other questions?
think that's it for me.
Ron, any questions? Greasy, any questions?
Well, I was gonna ask about the exam where you told me it was a type 1, but it was I thought it was a type 2, but you kind of cleared that out. You said that in order for it to be a type 2, it has to pass the middle of the Asian range, and as I see, it didn't pass through me. So it kind of answered my question.
Yeah, so you're gonna have, and we're gonna get into it on week two video, because I think, you know, a lot of people, you want to make sure you understand what it is that you're treating, right? At the end of the day, take everything away, all the EMAs, take the TDIs away, take all the lines and all this stuff. You're treating a pattern that happens after the Asian session. Okay, so understanding where that pattern starts and begins matters, because you can see M's and W's literally like every day, everywhere, right? You can see M's and W's literally everywhere. The question becomes which ones actually matter, which ones don't matter. You know, and so knowing the specific type of pattern that you're trading, along with the correct time that goes with it, is going to play a huge part and help you determine, okay, was that the right pattern or was it not the right pattern? So once you understand the pattern, then we can talk about entries, you know, directional bias, levels and cycles and all other stuff. But at the end of the day, what you're actually trading is a pattern that happens after Asia.
Hey, Mark, sorry to cut you off, but I think you're echoing and breaking a little bit. I'm not sure what it is.
Yeah, it's a major echo the whole time.
Is this any better?
Lovely.
Yes.
Yeah, so far.
Okay. All right. So, Greasy, any other questions?
No, I think that's it, man. I appreciate it.
No. So somebody pick a pair. What did we do yesterday or last week was, what's a pair that hasn't got some movement?
Last week was USD CAD and something else. I think it may have been pound JPY. I'm not sure, but
so let's do. Well, did we do pound AUD anytime recently?
2 weeks ago.
2 weeks ago.
We haven't done pound NZD, but you know that kind of runs like AUD, but
yeah,
never know, depending on what week.
All right, well, we'll do two different ones today. So we'll do, I want to do a euro pair, like, we'll do pound NZD and euro AUD. I don't think we've done euro AUD now. So, all right, let's do this. I don't know, this is kind of an advantage Troy, though, I feel. It's kind of advantage for you, Troy.
You think so?
I know so, absolutely. Are you kidding? I know so. All right, so you want to do pre-pandemic or during pandemic?
It doesn't matter.
What does anybody else think?
Oh, isn't the after pandemic a different new game, or
What's that?
isn't like after before pandemic, after pandemic, isn't the new game after pandemic, or is it all the
Yeah,
same?
but I mean, like, we're still in the damn pandemic. So I mean, it's the reason I asked before or during is because when we talk about during the pandemic, you're not really going to be able to use ADR at all because pretty much every day was like 200-300 pip moves during all 3 sessions and stuff. But that's why I ask.
Got you.
If you wanted to do pre or not, just so you can get more of a I think almost like a more realistic kind of timing to stuff.
Sorry, Mark, can you explain, so what happened because of the pandemic?
What happened because of the pandemic?
Yeah, like why is there a pre and a post? I mean,
well, because the markets were very unpredictable during the pandemic. So you had, typically you would have, let's say, during the pandemic, while everything was going on, typically, let's say on Euro USD would be a good example. Before the pandemic started, the average daily range on Euro USD was like maybe 55 pips. While the pandemic was going on, like in the really thick of things, like March, April, May, June, that average went up to like 100. So all of the a lot of the pairs pretty much doubled its movement in a day, and it was basically literally every day, and so you really couldn't use the ADR at all to really help you in any sense because of that.
okay, thank you.
So before, obviously, we would have more of a kind of a true range of how the market really would move. Let's get that a little bit. So yeah, so that's why. All right, so let's see what we have here. By the way, so we're coming off of a big downtrend. You can see that, and that looks like an accumulation cycle, and then it's like a trending cycle beforehand. Let's for those of you that don't know, pound NZD typically has like a ridiculously large, whatchamacallit, it typically has a pretty big Asian range normally of at least maybe 50 pips normally. So it's not very uncommon to see that type of movement during the Asian session on NZD pairs. So NZD AUD pairs would have that, obviously, because the Australian session that happens is happening at the same time that the Tokyo session is going on also. So that's why you will see the movements that it does during the Asian session. And typically they'll start at about maybe 9 o'clock or so because of the news that happens on NZD and AUD pairs. So that's pretty much kind of like a very common behavior essentially. So just note to that on NZD. This is all NZD and all AUD pairs are pretty much the same thing. So, all right, let's get to.
And so we expect the same kind of movement out of the Asian session as we do with the others? Or no, that movement passed?
What do you mean in the sense of that? What do you mean?
So, you know, does it form like a type 1, type 2, type 3 after it exits the Asian session?
Yeah, so the patterns are still the same, but you're going to notice that each individual pair has its own kind of story behind it. So, for example, like if you're trading type 1 patterns, right, then probably pound and ZD is not going to be the best pair to trade type 1 specific patterns. Why do I say that? Because if you go back 2 years running and you go back to comparing, let's say, pound NZD versus pound USD, if you compare the two, let's say from 2018 to 2020, you're going to have double the amount of type 1 patterns on pound USD than you would on pound NZD. So each pair has literally its own, think of each pair like its own person, and they all have their own personalities that you need to learn. So that's why you go from 20. Think about if you're dating 28 people, how well can you actually know them? If you're compare that if you're just dating one person.
That's the Bachelor. I'm just kidding.
That's what I'm saying. So think about it if you're married, right? How long would you think you'd have to? How long do you think it'll take you to piss off your husband or your wife if you've been married? Because you know them so well. So I mean, it'll literally like 30 seconds you can get them mad. It's the same thing. No worries, Tracy. So it's literally the same thing. But each pair is going to have its own, kind of some behavior stuff. All right, so a couple things to notice. We have price just shot down, came up to the middle, and then shot down. Now, another thing that you're going to notice about NZD pairs and AUD pairs is that the pip value is extremely high on those pairs. So, for example, this one candle here, let's say on Euro USD, might only be 10 pips. While on this particular pair, that same candle is 26. So pip value is extremely high on NZD AUD pairs. That's why if you look at the average movement of them, the average move is 150, 170 pips per day. That's for a reason. All right. So
this would be considered type 3?
Well, so we're basically into the London session. Where would your entry be if you were going to take this? If you were going to take this out of type 3, your entry would have to be like all the way up here. because there's no way you're entering after this. You're too far out. This happened so quickly that I didn't even see it until it's too late anyways. But if you're paying attention to this and you're going to trade this out of type 3, then your entry would have to be like literally after that candle. And it really comes down to the behavior of this one candle basically taking out, 1, 2, 3 candles. 45 minutes of trading done in one candle. Now, the good thing about NZD pairs is that because the pip value is so high, literally, like if you were to taking a trade after that candle here, I mean, you're already out of the trade, like a candle and a half later. So the trades to get to 30 pips are very short in terms because of the pip value is so high. So the thing that I'm looking at is, okay, how bad is this previous week's low going to be taken out? Because we've been in a downtrend for a while, right? So the downtrend is obvious to everybody. Stevie Wonder could watch this downtrend happen and he would know about it. You know what I mean? Like it's too obvious of a downtrend. So I'm actually wondering and thinking, okay, well, is this out of this downtrend because it's so obvious? I'm actually wanting to look and see, does this low really get taken out and it continues on? Or is this going to be used basically as like an anchor point to go back up? Does that make sense?
Well, Mark, by the time you look to see where it's going, to see if that low is going to be taken out, you've already committed up the top where you showed us before. So what do you do in a case like that?
Say that one more time. You've already committed to what?
You've committed, like say you entered on that red candle right by the 3 blue ones, right?
This one here.
After that one, yes.
Okay.
So you entered there, so you already committed. Are you just kind of keeping, I mean, I guess you're watching it, because what if it does turn back where it hits the lows that you were showing us to your left?
Right. So, I mean, honestly, you would already be out of the trade because you already would have gotten your 30 pips.
Okay, you're right. Okay.
So, I mean, you're already like, down here's already 70. So, I mean, you're already out of the trade to begin with because of the literally pip value of that,
Okay.
of the pair itself. So because of that, that gives you an advantage, obviously, because you're already, you're already in profit. So there's really, you'd be out of the trade already.
You see that railroad between the red, blue, and then red again? It's
Yes.
in the middle. Would it be irresponsible to enter right after that red candle, or something you probably wouldn't do?
To enter to what, a buy or
No, to sell. So you see how price try to go back up to the I think that's the 13th EMA, and then price touched catch up and then drop back down.
So I would ask you in the sense of, okay, so if you get in here, right? That's what you're talking about, right?
That, yeah.
Okay. What pattern are you trading?
No pattern.
No pattern. So why are you getting into the trade?
I think that's greed, boss.
Well, it's the fear of missing out as well.
Right. That could be on too.
That's why. It's a fear of missing out. You think that this one trade is like the only trade that's going to be available for the rest of your life. So you don't want to miss out on it. Right? So the mindset that you should have is you're going to miss out on trades. That's just the reality of it, because you're not going to be on the charts 24/7. Right? So you're gonna miss trades. Are you telling me that you're gonna miss, every single possible trade? No. But you will miss trades. But just because you miss a trade doesn't mean that there's not going to be another one the next day or even the next session. So there's no need to have that fear of missing out. It's just not really worth the squeeze there.
Mark?
Yes.
Which pattern is it you're trading there? I mean, I didn't see the M there, right?
I wasn't trading any pattern here. I was just
no. I'm
yeah.
just asking because I don't see the M, and I'm wondering if I'm missing something there.
So this could be if you were paying attention to it, this would be a type 3 pattern, because you have basically a railroad track here pinning to the 50.
Okay.
So that would be a type 3 if you wanted to trade it. You also have here the TDI as well. So you have a pattern pin to the 50, pin to the middle of the range. You're in a downtrend anyway, so I mean you have a bunch of stuff, a bunch of confirmations already. But for me,
okay, but there's not it's the railroad tracks, it's not the M.
Right. For me, I'm looking more of I'm looking for a reversal, because we've been going down for such a long time. You know what I mean? That the trend is so obvious.
Yeah, okay. So what would be your the things that you're looking for to confirm a reversal for you?
Well, right now, the biggest thing that we have, at least, is that we're trading at the very bottom of the TDI, which is good.
Okay.
So that's the first thing. So we're already overextended. And so another thing would be, if this is, let's say, level 3 here, right? This would be the peak formation low. You get what I'm saying?
Okay. Yeah.
But in order to have an actual reversal, we need to have behavior that tells us that, and we haven't had that behavior yet.
Yeah. Thank you.
So here, this would be kind of interesting for me, because this would be considered almost the first leg for me. This could be the second leg here. And so if we come down to the TDI here, there's the first leg, and then the second leg is actually higher than the first. So you have the smallest of divergence here, while this is actually still going down. You see that? So the next question is, how far am I from the 50 EMA here? About 30 pips or so from the 50. We're already above the 13 EMA. So, and we're at the bottom as well, entering the US session. So we're not all the way up here or anything like that. We're literally at the bottom. So yes, go ahead, India.
Hey, Mark. Okay, so the first leg doesn't have to be out of the shark fin. It doesn't have to be that.
Doesn't have to be what?
A shark fin out of the TDI to confirm as a first leg.
No.
Okay, because I see the first leg in London. Okay.
Yeah, yeah.
Okay.
So what would be, if there's any setup here, what would that look like? Well, it'd have to be something that's gives you very little, very little risk. So you'll find this out, we'll go through all this on, I think it's week 3 on entries and exits, but there's going to be a certain amount of pips that you don't want to go over, so right here we're at about, 14, 15 pips, which is not bad. It gives you a 2-to-1 on a pound NZD pair that typically you would actually want to have about 20 to 25 pips as a stop loss, because the pip value is actually high on this. So let's see if this actually plays out or not. A lot of the times the trades only go 2 to 50 and then they stop. It's just a thing that price does. It's back to the 50, back to the 50, and then it just stops. So that's 30 pips right there going up on a reversal. Let's go through this real quick. All right, so you see what I mean. We're into Tuesday now. Now I want you to pay attention to what I was saying before with the trend being obvious. And look where we are on Tuesday. On Tuesday, where price action is above the 50, above the 200 EMA. Okay, so with that being said, where price action is right now, to answer your question from before, is if you ask me what am I looking for out of this, I'm looking for price to come down, and ideally if price can bounce off of one of these EMAs, I'd be looking for that. Does that make sense to you or to everybody? So that's what I would be looking for is a pattern to come down to the EMAs, because my bias is to buy. So I'm trading above the 200 and the 50 now. So far, you just had a big push down right to the 200 EMA, right? Does everybody see that, right? Big
Yes,
push down to the 200 EMA. That 200 EMA, or all of the EMAs, at some point are going to be basically acting as either support or resistance. And price is attracted to where the EMAs are. So all I'm looking for now is, does price action hold? Does the behavior hold this in mind to where price is literally just bouncing off that 200? If price bounces off that 200, I know that they don't want to go lower. Okay? They don't want to go lower than that. That's all that I'm looking for, is for the behavior of price action. And then all I'm looking for is one candle that basically pushes away from everything. because once they're done, you're gonna see one candle that pushes away from everything. You see this, you see all the spikes that happened, all these spikes. That's all. Every time that there's a spike, think about what's happening. Is this at one point this was fully red? So how many people do you think are selling? So that right there is the candle that you're looking for. Look at that candle, and that candle basically took out all of this candle, all these candles here. Over an hour and a half of trading was taken out by one candle. You see that? That's the candle that you'd want to use to know that they're not coming back now from this. Those big push away candles are the ones that they don't come back from.
But do you have to wait until that candle is done, like the 15-minute is done on that candle?
Well, think about it. If you don't wait for it to finish, how would you know that that candle is like that?
Right. Okay.
You know? So absolutely, you have to wait for the candle to finish. Yes, absolutely. You never want to go into a trade just, saying, okay, I'm going to get in on this candle just because it's pushing up. Just like on this doji candle right here, you would have been like, okay, let's sell because it's fully red. And you didn't wait for the candle to finish. You know what I'm saying? So absolutely, You want to wait for the candle to finish. Yes, absolutely. So then the question becomes, all right, where do you take this to where it makes sense? Where do you take that to? You could take it really to the 800 is where you want to take it, right? But just to get a 2-to-1, all you have to do is clear basically yesterday's high, which is right there. So you want to clear yesterday's high. And then anything after that is a gift. Free money. Free money.
So I have a very novice question. You know how they say you need to calculate your stop loss before actually going into a trade, right?
Mm-hmm.
The time it takes for you to look and see, okay, that candle is done, and then you do your stop loss and all that. That candle right after it is already through the gate.
Yeah, so what you're going to end up doing, and at least this is what I do, is if I'm expecting price action, if I'm expecting the type 1 here to bounce off, I have this up already. Mm-hmm. So I know like what my numbers are. You know what I mean?
Okay.
So like this is already up. I just have it, somewhere around here. And I just move it constantly as the candles form.
Got it.
But I mean, if you have a candle like this, I mean, you can choose to get into the trade right away and then put in your stop loss and take profit afterwards. You got to know, like, at least some time of how much risk you're taking, because if this candle were to be like 50 pips, there's no way I'd be taking this trade. It doesn't make sense. I'd have to wait for a pullback on the next candle to actually enter the trade. And to hold yourself accountable for that, if this, let's say if this candle were to be like, 50 pips or whatever, there's no way you can get into that. So for me to hold myself accountable, I'm not like going to put a market execution. I would put in like a buy limit order, like halfway down the candle where I would want price to come down to. And so if price comes down and gets me into the trade, great. Then I got the entry that I wanted, you know. But there's no reason for you to risk, you know, money that's just not. You just don't want to do it. It just doesn't make sense. So in 2 candles, I think this is why Troy likes his pips so much. In 2 candles, you got 37 plus pips out of it. So in 30 minutes, you were already out of the trade.
Best feeling in the world is when that one candle hits your take profit right away, right?
Right. Yeah. Now,
Okay, so back to the types now. Would that be like a type 1, type 3? No, 1.
this would be a type 1. Yeah.
Type 1. Okay.
Yeah.
And that where you took that trade would be the second leg of the W.
Correct. Yes.
Okay.
Like, how would you trail your stop on that? Would you trail your stop? It looked like just a straight rise candle coming out of there. So,
I trail my
you really
stop.
wouldn't. Like, how do you trail your stop? Like, you know, to keep yourself in profit. You know, just not on this trade, but just off, you know, any kind of trade. Like,
I mean, that really depends on the actual trade itself. I mean, trade like this, I wouldn't even trail a stop. I would just let it hit my take profit.
okay.
You know, if these candles don't appear like this, and it's like slowly, it's a more slower process, like you would find on like pound USD or pairs that are not like NZD AUD pairs, then you could trail your stop loss and stuff like that, or move it to take profit once you have 20 pips. I mean, all this is going to really depend on the pairs that you actually trade, because you really would not use that kind of behavior if you're trading like pound NZD pairs or pound AUD, because the pip value is so high that, you know, 2 or 3 candles typically is going to be like 30-40 pips in one direction. Now you're at the beginning of the New York session. Price went all the way up, came all the way back down. And so if I'm all the way here I'm not at the top, I'm not at the bottom, I'm in the middle, what am I getting into?
That's a continuation, possibly.
It's a continuation, right? So what does that look like? This candle is about 20 something pips. I mean, not. It's not too bad of an entry. You could try to take that to that 800 then. But ideally, you want to see if you can get a pullback. This is like super early. This is only 2 candles into the U.S. session. So you want to see, you know, what the next 1 or 2 candles do. But worst case scenario, it's a 17 pip, 18 pip almost stop loss to, you know, to get almost a 4 to 1. Really, and even if you make it up to the high here of where price has already been to, it's still a 2 to 1 risk to reward ratio.
Hey, Mark.
Yeah.
Yeah, something that I don't like that I see on this trade. Right when you go to the high, can you move your cursor to the left?
Yeah.
Nope, to the right. The red candle.
The red candle.
Right above New York.
Okay.
You go
right here?
more. Yep. Only thing I don't like about that is they did the move up. They pinned the high. All right.
Yep.
They got breakout traders in. Then that red candle closed below the green candle. Then that big push down, that That's the only thing I don't like about that.
Yeah.
That would keep me out of the trade based
I'll
on
keep
that
you out of
behavior.
trade. Yeah, I would want to see what do the next candles have in place, because if the next candle obviously is straight down, then so yeah, the next candle really would tell you a couple different things. So let's see what happens here. That's what I was saying. Like I'd want to have a pullback or wait for another, because it's really early in that session. Although one thing that I do like is that basically is on top of the 50, and it looks like they don't want to go back down to this area here. So let's see what happens here. Yeah, so they're riding the 50 there. So on this previous candle here, could have been a pullback entry that you could have done even a better, a 10 pip stop loss instead of a 17. And then now that let's say 4 to 1 risk reward now turned into almost a 7 to 1 risk to reward ratio. That's pretty good. So that candle right there, also another behavior telling you that they don't want to go back. And they're not coming back. Right to the 800, and then boom, reverse.
Sorry, another novice question again. So you would enter there because it's what pattern is that? A W now?
This is the continuation trade. So you'll learn about this in the advanced course.
Okay.
Yeah,
okay.
this is it's a continuation trade. Basically, it's a continuation of what happens during London. So if you had a move that happened during London to go up, you'd have a pullback, and then right at the beginning of the US session, you would continue going back up. So it's basically like this. All right, so let's go to the next day here. Wednesday. All right, so Wednesday. So far, you've had basically a move down Monday that rose. Tuesday pretty much had a full day of rise. And so you can see now we're basically trading right at the 800, and you have the 50 right there as well, right? So for me, this brings me up into the trades that I like to trade, which is basically now that we're looks like we're trending up. I want to see a trade that basically bounces off the 50. I want to see a type 3 trade that bounces off the 50. Would be the ideal setup that I want, because you can see price is already moving higher up here and the 50 is all the way down here. So the only possible real directional, correct trade to take would be a type 3. There's no way the price is coming all the way back down and making like a type 2 to go here. Typically it does like a type 3 and it bounces off the 50. So everybody follow me so far?
That makes sense. And can I ask, I'm sure you'll get into this later in the course, but Wednesday is a good day for a midweek reversal. So what is indicating to you that there's not a potential for a midweek reversal, especially because you're around the 800? I would be hesitant. I mean, I know you broke through it, but I would be hesitant saying, well, it's a false breakout and it's going to go back down.
Sure. Yeah. So what happens is basically it's a trending cycle for that week. So meaning that I'm only looking for buys because we're coming off of a peak formation low here. So I'm only looking for buys.
So okay. If you hit your peak formation, whether high or low, does that mean then there's no midweek reversals? Is that what you mean? Like, this is going to be a trending week?
Yeah, so you're going to notice, right, and we're going to get into this in week 4, is
Okay.
there's the market maker cycle, which is this, right?
Yep.
Which is WVV, M or MAAW,
W.
right?
Yep.
So this cycle can happen at any time frame, any day of the week, any of that stuff. It doesn't have any kind of boundaries as far as when it happens, right? So what you're going to learn is that there's something called weekly cycles that happen that are bound basically by Monday through Friday. Okay. And so those, depending on what day it is, you can basically trade and have a directional bias just from a Monday through Friday type of scenario. So because on Sunday, Monday, we had a false move down, then we had a full day of rise on Tuesday, we're coming off of a peak formation low. I know that the likelihood of this being a trending cycle is extremely high compared to having like what you call a midweek reversal. Midweek reversal typically would happen when you're at level 3 on the count. So if you're on the count, let's say if you're on MAA and then you're towards W here, if this is Monday, Friday, let's say this right here is Monday, this is Friday, this week is more likely to give you a market maker weekly cycle because you'll have that reversal, that midweek reversal that causes you basically to have the W. Does that make sense?
Yeah.
So when you'll get into the weekly cycle specifically is in an ideal perfect scenario, you'll have this here, you'll have these be market maker weekly cycles. This here will be trending weekly cycles, and then this here would be accumulation weekly cycles if we break them down in a week.
Okay, that was really helpful. Thank you.
So for me, I'm looking for a type 3 setup. That's what I want, and that's what I love to trade. So notice, what does that look like?
Type 1.
Type 1 or what? Really, type 2 as well. Right?
Type 3. Oh, type.
No, right here.
Type 2.
Only 12 pips above the high, right? So what does that look like? Looks like an M, right?
Information now.
Right? This has an M here as well. This is where people take this and then they get stopped on when they're wrong. It's because you're going against the directional bias. So even though that there's a pattern here to trade, right? I'm not going to be suckered into trading that pattern because I'm looking, my directional bias is to buy, not to sell. And if I'm wrong, by the way, and this actually does this, like, it doesn't bother me. So what? I was wrong. Big deal. So see that? That right there is what I'm looking for. If the next candle gives me a solid blue candle, so a solid blue candle here, going back up, that's the type 3 trade. Because then you're getting into, now you're going to get a star pattern out of it, basically. Does that make sense?
Yeah.
And there it is.
Yo, bro, you're the GOAT.
It's not a GOAT thing, bro. It's about just fucking doing the shit for so long. The only difference between me and everybody else on here is I've just been doing it longer. So what job do you do, bro, for your job?
Me, I'm a barber.
Barber. Okay, you're a barber. I can tell you one thing. I could not do barbering, right? So I suck at barbering. I don't think I'd be good at barbering even if I was doing it for 2 years. I just don't have the hand coordination, you know, thing to do it. So it's
So you
just,
stop loss. Why
yes.
did you stop it there? Wouldn't you go all the way down to where it spiked to?
No, because if I'm wrong, I want to be wrong right away.
Okay, got it.
If I do this, now I'm at 30 pips. That doesn't make sense to me. The reason I don't want to come down here again either is because this spike here tells me that they don't want to come down anymore. They just did it to get people to trade, to get people in the sells. If you think about it, this candle's red. This next candle was fully red at one point. How many people do you think sold that? A lot of people sold that. This is already 2 to 1. So I was going to say if that candle would have stayed above the 50, that would have been probably another good continuation trade. But it pushed right through it. Don't like that. All right, so moving on to Thursday. All right, so Thursday. Where is price at now? Like, where is it, you know, essentially? Look where price is. It's above all the major EMAs, right? The 800, the 200, all that stuff, right? So if you look at where price is right now, and you know you're in a trending cycle, what would be the ideal setup that I would want to look for?
Well, I don't think it would make sense to be a type 1 because it's going to be breaking well below your 50. So maybe a type 3 again?
Okay. Troy, what am I looking for?
Can you zoom out? Oh, okay. Let's just see. Thursday, if I was in this thing and if I was still looking for longs, I trade a little bit different. I still trade the strategy, but I would look for them to make a move down to hit the stops and then look at the price action for the
Okay.
move to go up.
True.
But you're in between yesterday's high. You're in between that swing low. If it trades in between, I'm doing nothing. It has to go to one of those levels before I even think about it.
Right. So the only two scenarios that I see is it would have to be either a type 1 that bounces off of these, or it depends. If this goes up, then I'm looking for another type 3 and bouncing off the 50. So one of those two things would be what I would be looking for, depending on what happens with with this price action. So if it goes just straight up, then the only thing I'm looking for is a bounce back to the middle and then to go higher. If price tends to like kind of struggle and then works its way down, I'm looking for a bounce off of here to go back up. It's the only two things that I'm looking for. If those two things don't happen, I just don't trade.
Hey, this is where I kind of get confused because aren't you in like zone 3, or this wouldn't be considered zone 3 yet? What did you say? Because I thought it was gonna go to the high and then maybe bounce back down, back to the
No, we're nowhere near that, man, because we're only 300 pips in. We're only like 2 days in. So this pair moves at, what was it, 170 something? 172 pips on average, this pair moves a day. So, I mean, I'm not really good at math, but what's 3 times 172? I know it's way more than 300.
560.
516, I think.
Right? So I know that I have way more room still to go up high. So that's why. So I'm still looking for longs. And I know I'm in a weekly trending cycle, so I'm definitely only looking for longs. I mean, this is like a repeat. Same thing. You see that? Same thing. Same thing. Just watch what happens. Same thing. You see that? How big is that? That's only like freaking 15 pips away. So, all right. So for you to get a good entry on this, you want to have a pullback. To me, this is too big. That doesn't, make sense to me. For me to take that, I want to pull back to at least somewhere around here. So somewhere kind of like in the middle of that candle. So then that way I could have this. Because from here to yesterday's high, which is, I can't use ENAs as take profit points. So I'd have to use what I have, which is yesterday's high. That'll give me a 2 to 1. Does that make sense? So if I don't get a pullback on the next candle or next 2-3 candles, and it just keeps going up, then I just missed the trade. Because the risk is going to be too much. You need a pullback. It just doesn't make sense for you not to have a pullback and not get into the trade. So there's 2 pullbacks right there. There's 2 pullbacks right there. And so now you can actually have a decent actual setup there. Just to go up here, that'll give you 2 to 1. That's like still 33 pips or whatever. Let's see, this is 4. What is that? That doesn't make that. All right, so why would you not take this M down?
It's the same story, continuation.
What was the reason?
Because it did the same thing as on Wednesday, where it continued. I think once it bounced up, the 50.
Right.
Yeah, you're going against the overall trend, and the only way to really take that is if you got in right at the top of the
Right at the
pins
top,
and get out right at the 50. But
yeah. So
you're
another
looking for a
thing is,
pullback.
yeah. So another thing would be that you're outside of the box as well.
Mark, can you explain the significance of being outside of the box? Because
Say that again.
can you explain the significance of being outside the box? I mean, are you saying that means that it's overbought or?
No, it's just the thing about the trade setups that I want you to trade, they're going to happen within the first 4 hours of
Right.
each session.
Oh,
So
gotcha.
typically from 3 to 7 during London. So anything. So after 7, from 7 to like 8:30, there's typically going to be a pullback that happens, or price doesn't really move.
Gotcha. Okay.
So that's why you don't take trades in between the separation of the boxes.
Okay. Thanks.
Yeah. I like this though right here. See, we're 8:30, and we're pin to the 50. We're not at the top. We're not at the bottom. We're literally in the middle. So where does that leave us with? We're bouncing off the 50 on the TDI as well. This could be a good continuation trade. So it'd have to be something like this. You can't go all the way to the bottom here. It's way too much of a risk. So you're literally saying in the next candle, if I'm wrong, it's essentially going to take me out and just be out of the trade 10 pips or whatever. But because of your bias, it's Thursday. I mean, you just saw what happened on Wednesday, and the same thing on Tuesday. That's almost a 4 to 1. And you're just trying to go to the highs essentially that it's already been to. So it's not like we're trying to go anywhere crazy. I'm just trying to go to where it's been to before already. All right, if you get extra, you get extra. It's like 70 something pips. All right, so Friday. So Fridays for me are kind of like a, I don't know. I feel like on Fridays the patterns have to be like really good for me to trade, because Fridays typically are used a lot of the time for essentially setting up the next week in advance. So a lot of times, you know, you're in a trending cycle like we are here for that week. And it just doesn't, you know, Friday comes around and it doesn't want to go like any higher. So it typically likes to go either sideways or something like that. So for me, you'd have to get a really good pattern that just makes sense for you to take a trade on Friday for me. All right. So if we look at where price is right now, it's basically coming, it's going to end up coming out of the middle of the range. So the only thing that I'm looking for is my bias is still to buy. We're still above the 50 on the TDI. If I can get possibly a type 2, you know, would be an ideal setup for me. If for any strange reason we make a move all the way down here and make a buy, then that would be another move also. So something like that is what I would be looking for on a Friday. And if that doesn't happen, then I just don't worry about it. It's not a big deal. And I mean, if you've taken all these trades during the week, I'd be sleeping on Friday. So does anybody see the behavior? Behavior.
Yeah, they're pinning to the low and then they just engulf the trap,
1,
possibly.
2, 3, 4. Go to line chart. There's W there. I've seen that pattern so many times. You're pretty low on the TDI. That's good. The question is, how big is this candle? It's only 10 pips. So, I don't know, to the 50, it's only 10 pips. You'd have to go to the top, really, to make this any kind of sense at all. You have to go to the top. Now, all right, so this trade, right, to me it seems risky in the sense that it's Friday, so this could just go to the 50 here and then just rest the rest of the day. Right, so if you get into this trade, you have to be aware of that. So if price seems to like hit a roadblock at the 50, then it might turn into more of a break-even trade or maybe a slight loss of a trade if you get into this. So you have to be aware of that could very well happen. If we count from the bottom to the top, somebody said 500 and something, right? So we still got some more room here. It's only 350. you got some room still. So let's see what happens here. See, now if this candle here, if that candle, this one right here, would have been something like this or like this, at the 50, I would have gotten out of the trade. Okay? So if this candle here would have been like this or like this, I would have just gotten out of the trade. Taking the small profit, 10 pips, whatever it is, and just be done. You see how price just hung around there on the 50?
Yeah.
An hour and a half. Then really didn't do anything. That's what I'm saying with Friday. That's right. That's what I don't like about Friday, is that price can literally just do that. So that's why I'm not a big fan of Fridays. For Fridays, for me, they have to has to make sense for me for that move to happen. And it's okay if it doesn't happen, it's fine. It's not a big deal. So think about it like this. You get paid to wait for this. That's literally what you're getting paid for, is you're getting paid to wait. I know that a lot of people have, the 9 to 5 mentality of, because I've been watching the charts for whatever, I don't know, 2 or 3 hours, that, that nothing, I haven't taken a trade yet, so like I'm not making any money. That mentality, you cannot have that kind of mentality with this. That kind of mentality is definitely just not going to work. I will wait 2, 3, 4 days for the right trade. There's no reason to give up money. This is money that you worked hard for. So why would you give up, your hard-earned money just so easily? At that point, it almost seems like you'd almost feel like you're essentially like, gambling at that point. So don't do it. Don't give in to what you think is, a fear of missing out on something.
I have a question quickly.
Yeah.
You see how we calculated 516 for the last pair. That was for a market maker cycle, or was that not sure how
What do
to
you
ask.
mean?
So you calculated 170 times 3, I remember.
Right. That's the current ADR times 3.
Current why do you times it by 3?
Because 3 times its own average is what you typically get before you get a reversal. So in a perfect world, from here to here, from here to here, is 3 times its own ADR.
I see. Okay.
So, it's basically like this move here is 1 time ADR, this is another 1 time, this is another 1 time. So it's 3 times its own ADR. Is it perfect every time? No. Sometimes it'll go 2.8 times. Sometimes it'll go 4.5 times. So it's not like, it's not perfect every time.
Right. Thank you.
Yeah. But that's why it's like that. Or that's why it's 3. All right. So any questions on pound NZD? Or what we just did? Was that helpful?
Very.
Very much so.
Okay.
Yeah.
Yes.
All right, so let's go ahead and do one more week, but we're gonna do it on what is this pair? The Euro AUD pair. So let's do it on Euro AUD, and we'll do 1 week on here. Go to here. We'll stick to before the whatever you call it, the pandemic stuff.
Mark, is there a way to know what the ADR is when you're back testing?
No, I don't know. No, the closest thing that you'd have is really just to add these averages up here,
Okay.
and it's not terribly off by what it's on now.
Yeah. I just sort of measure the actual things that I see, but
Yeah,
I was just wondering if there's maybe a place you can go to look.
Yeah, I just typically just take the average. If it's 172 now, it's not that far off, from what it was back then. So
Yeah, but GBP NZD was 230 not so long ago.
yeah, well during the pandemic months, it was, I think I want to say like 300.
Sure.
Literally every session, every like Asian session, London session, New York session, it was literally doing 200-300 pip moves every session. So that made
Sticking to the same patterns and just moving bigger, or
say that again.
sticking to the same patterns with just bigger moves, or did the patterns alter?
No, same patterns, just bigger, way bigger moves. And so like incredibly like imagine trying to get in on a trade on like a type 1 when your stop loss has to be like freaking 60 pips.
Oh yeah.
You know what I mean? It's ridiculous. It was really ridiculous. So that's why, we couldn't use the ADR at that time because it was just every day was just something crazy. So it wasn't really as predictable as we would have liked, So yeah. So all right. So in this one we had straight sideways movement. You can see the EMA is going straight through it. So it's an accumulation weekly cycle for that week. And it almost looks like we're coming off of, you know, a peak here and then working our way down again. All right, so let's see what we got here. A lot of times, Sunday, Mondays, I don't like to trade. I like to actually get data first and then, you know, see what happens from there, unless a really good pattern comes along. All right, so we're moving outside of through the middle of the range, right? So I know a lot of you guys had examples of type 3 patterns when price was coming out of the middle of the range. If price is coming out of the middle of the range like this, it's not a type 3 yet until it hits the top and then comes back down. So the type 3 patterns that we trade are not directly from the middle like this. They have to come from the top or like from the bottom and then get stuck. Does that make sense? So just be aware of that. So right now for me, this price action has to come to the top or to the bottom before I would even consider it like a, you know, something that's tradable or whatnot. So just like how I did right there. So did anybody see anything during that run there during London?
Nothing tradable, but I see that it broke the previous day's low. Just want to see how price, if it continues to, if that's going to be a barrier for a continuation short or not. But nothing tradable for me.
Very good. So going into the US session, let's see what happens here. So notice how we're trading now coming into the US session. This is like obviously still super early into the US session, but we're not quite at the top. You know, we're not at the top here. We're not at the bottom. We're somewhere here in the middle. The only thing that I don't like is that we're actually above the 50.
So at this point, do you have a bias or are you just watching to see what's happening?
The bias for me would be to sell based on the fact that we're in a big
Downtrend.
Big downtrend, yeah, on the higher time frame. Yeah, that would be my bias, just off of right now.
Sorry, Mark, I may have missed this. So isn't that like a type 2, and wouldn't you enter at that evening star right there or no?
Where at?
In the middle, in the London session to go for a sell.
To go for a sell.
Yeah, there.
Right here?
Well, I guess somewhere around, yeah. No?
No, well, I mean, for a type 2 pattern, I'd have to be at the top.
I mean, a type 3, I'm sorry, a type 3.
Yeah, so if you wanted to trade a type 3, if you wanted to trade this as a type 3, then it would have been like after right here.
All right. And it wouldn't be worth it.
So you're looking at 17 pips, you know, stop loss, Yeah, it would not have been
Okay.
worth it now.
Okay.
All right, so let's see. That actually might work out as a continuation trade there. That could have been an entry. The entry really should have been up here, but it would have been too late for me anyways. All right, let's go to Tuesday. All right, so Sunday, Monday, straight sideways. Okay. So you don't get really nothing off of that at all. My bias is still to sell because we're still above the higher EMAs. So you gotta have a sell pattern. The only sell pattern that I would even think about taking would be something that bounces off here, so a type 3, or something maybe bounces off of here, the type 2 as a sell. So those would be my only two type of trade setups that I would want to see. I might be thinking of a reversal here, but I'd have to get how close are we to the 50? 26 pips. So this is, yeah, it's not going to be worth it. So a whole day of going straight down, and you couldn't get into a trade. So how many of you would look at that? I mean, that's an awful day of trading.
The
Well, how
moves
many
were
of
there.
you-
The timing was off.
Yeah, yeah. The timing was off. That is correct. The timing was definitely off. So now we're getting into Wednesday. Kind of the same thing. Is now we're definitely looking at, if we're coming off of, you see this whole move here like this, down like that, and then another one down. You can see we're just working our way down. Looks to be like a trending cycle because we don't have, let me if I can go back up. So if we go up to the 1 hour time frame, we could see we go back to the left. There's nothing here besides this structure here. And that's it. So I'm just going to put that there for reference so we know where price action, the closest, let's say price action would be. All right, so on this day, kind of the same thing. If my bias is to sell, then I'd be looking for, for sell setups, essentially, because of where the EMAs are, like either a type 3 or a type 1. If you look at the 50s right here, and the 200s right here, or the 200 right there, so either something that does this or something that does that. One of those two things is what I would want to see. I mean, you can see where price action is right now. It's coming out of the middle. So before anything, I'd have to have price either go to the top or the bottom before I could even think about taking any kind of a trade setup or anything. It's just floating in midair.
Mark,
Yes.
earlier, I think Rain asked you about when would you expect a midweek reversal and when not, and then you said it's when we're on level 3. Would that be on our hourly time frame?
What do you mean early time frame?
Hourly.
Hourly.
60 minutes.
Okay, yeah. So if you can count three times ADR in one direction, yes.
Okay. Then you expect the reversal, so that would
It'd be
then
the
to
same
expect
thing as
a midweek
basically,
reversal.
right? It'd be the same thing as what you call it? OMG. If you're looking at the 1 hour time frame, it'd be like counting 3 times ADR in one direction. So I mean, just by looking at this, I don't know. Does anybody know what's Euro AUD is right now? What is it? 119. So times 3 is around 300, 60 or so. So what's all the way from up here? That's definitely 1. And then this right here would be a reset right here, actually. And then that would be coming down for another one. that's already well over one whole cycle also.
Okay, so now you would actually have the chance of a midweek reversal instead of a trending cycle.
I want price to come down to this white line.
Oh, okay, because of the historical, yeah.
Right, because that's where, this entire
Exactly.
box here is where, is the last time you had any kind of structure before.
Yeah.
So I want
Okay.
price to really come down more into this area.
Okay, thank you.
So nothing on that day. So 2 days, no setups. So this day, was this Thursday now? Thursday. I mean, it doesn't really change. This is coming, if this is coming out of the middle, this has to go down, come back up, and then do that, or this has to come all the way back up and bounce off of this. One of those two. If it ain't doing that, I'm just not interested in taking the trade. There you go. See how price is doing that, hanging around there. I don't like that candle though. That's not a good candle. You're overstretched on the 2DI, which is good. You're pinning to the 200, which is also good. I just don't like that candle. What does the next candle look like? Okay. So this right here would be where this right here would be 1. This would be 2, and I'd be looking for a sell here. The problem is that this candle is probably going to be too big to get into that, which is like 15, 16 pips. So you're going to have to get a pullback to get into this. So for me, a pullback would need to at least come up to here, middle of that candle there, at least half of that candle back for it to make sense, because then it would make sense of 15, 16 pip stop loss. And then on a 2-to-1, you could just literally just take it here and you get, a 2-to-1 risk reward out of it. Anything after that would be fantastic. But that would be the ideal, scenario would be to go to last week's low, which is that yellow line here. That'll give you over a 2-to-1. So let's see. Okay, so you get 2 pullback candles. It's literally missed it by like 2 pips or something. So there you go, there's one.
So Mark, in a case like that, I would have probably jumped out of that trade.
Well, once you get into stuff like this here, right? And yeah, I mean, this is already past the box anyways. So you're not looking to really hold any trades, you know, past 12 o'clock. It's just a lot of sideways movement. The only time you'd ever have any kind of movement is when you have FOMC news. That's at 2 p.m. Eastern time. Other than that, it's just going to be nothing. All right, so Friday, right? So Friday, it's got to be a good pattern on Friday for me to even look at it. You see this whole week, how many trades have we had this whole week? What? Was it just one? One trade this whole week. So the word price action is right now, the ideal setup is to definitely have something come up here, or it comes down and bounces like that. That's not going to come out. It's going to keep going. All right, so what is that? That's 8:30. So that is that's the first Friday of the week. So that's what is that called? Somebody read my mind. What's
NFP.
first Friday of every week?
NFP.
NFP, yes, NFP. That's the NFP candle right there. And there's really nothing that I would trade. So nothing I would trade that week. So you can see the comparison between one pair and another pair. 1 week you might have just one trade, while on the other pair you have, God, like freaking 6 trades. Now, if you were to trade this week, this particular week on that pair, and you only took one trade, how would you feel?
Good question.
How would you feel?
I would feel like I needed to trade more pairs.
You feel like you need to trade more pairs, right? That's why you have 5 pairs. A lot of people would look at this and they would feel like they would have missed out on something. Right? Like, oh my God, you missed on this whole move and this entire move here. It's easy. You could have just held it from here, right? So if you could have held it from here, well, what's the pattern that got you into the trade to begin with? You know? What's the pattern? It's not there. The only thing that was there that made sense was this. Did it suck that this wasn't tradable? This really wasn't not tradable either. It sucks, but it's not the end of the world. You're gonna have another week that comes along that could have 3 or 4 trades that week. So it's not always going to be perfect. All right. All right. Any questions?
Oh yeah, I have just one question. What was it? What was the Telegram that you requested me to hit you up on?
I sent you a message on it, actually.
Okay, one second.
If you want, just stay on here for a second, and we'll talk after this is over.
Okay. Oh, okay. Yeah, no, I see it. I see it.
Cool. All right, guys. So if you don't have any questions, we'll see you Tuesday for London session then.
I appreciate it, boss. Thank
All right.
Thanks, Mark. Appreciate
You're
it.
welcome.
Thank
Mark,
you, Mark.
I have
Have a
one
nice week.
question.
Yes.
Mark,
Yeah.
I have one question. So tomorrow's a holiday in the US. Do you recommend not trading tomorrow?
If it's a holiday, I wouldn't trade now.
Okay.
Mark, I have one question too. Now that I'm starting to understand how you're using the Asian session to spot the type 3. If I want just some confirmation with that, can I post that in the Telegram group, or would I be better off just waiting for our one-to-one session to kind of show you some examples to see if I'm getting that better?
No, I mean, listen, you can bring the examples to the group sessions. You can bring it to one-on-ones. You can bring them to the trade room sessions, whatever.
Awesome, thanks. Okay, yeah,
Yeah.
I'm gonna do a lot of back testing tomorrow and get the hang of that. So thank you.
Yeah, no worries.
All right, bye.
Bye.
Okay, talk to you Tuesday.
All right, talk to you Tuesday.